Welcome back to this Saturday's blue chip session. The blue chip stock today is a good old petroleum stock, Exxon Mobil. Of course, Exxon and Mobil at one point were two separate petroleum companies. They of course merged. Stock symbol was what? XOM. Of course, before we get started, a big shout out to all the people who watched the video yesterday. But you know, if you watched the video, it would really mean a lot to me if you click the like button, okay? Also, before we get started, standard disclaimer applies. This video is for educational purposes only. It's not for financial investment or trading advice. So let's jump right in with our ever popular 20, 100-day moving average stock. 100-day, 20-day, you can see Exxon is still well above the 100 moving average. But it does, is the ride over with? Is it starting to move back down? Okay. Next, we look at the MACD. It's still well above both the MACD and the +1 MACD line. Okay, look at that. My goodness. Bollinger Bands. Look at this. Average. You know, look how narrow it was back here. Okay. Then it started to open up. It moved above. Now it's kind of like tiptoeing along the plus standard 2 deviation line before moving back down towards the center again. Okay. And the MACD, you can see we are starting to see it's starting to cross below the signal line, and we are beginning to see a couple of negative bars here, okay? What about the first quarter forecast? As always, I got not one, not two, but three forecasts for you. So as the old saying goes, pick your poison. The orange line is the Excel forecast, conservative as always. The green line is the LibreOffice Calc forecast, and the most aggressive of all is the Google Sheets Simple ML extension. It's saying we're going to go from 156 up to about 179. It's forecasting a big move up. Of course, remember this is a weekly average price, a weekly average close. Okay. Anyway, and as always, remember that ETS is not optimized for stock forecasts.